Hi guys, I'm back again with another video. So I'll be continuing with this basic forex basic videos. So I would like to say thank you for the people who have been watching and subscribing. I mean, just yesterday we're on like 115 subscribers, but to my surprise today we're sitting on 124 subscribers. So I would like to say I really appreciate the support. Please continue watching. Keep on doing what I do. Keep on doing what you do best. I will also continue doing what I do best. Thank you so much, guys. But without any further waste of time, let's get into the video. So on this video, I will be basically showing you how to draw trend lines, because it's also something that I used to struggle with, because sometimes you do not know whether to draw them on the wicks of the candles, or you must draw them at the actual touches, like at the open and the close of a candle. So that is what I will be basically showing you today. So what are candlesticks? Because we need to know what are trend lines before we can actually use them, right? So there are two parallel lines that act as dynamic support at low touches and as dynamic resistance at high touches of the market. They basically connect the highs and the lows of clear trending market. So you would notice that on the previous videos that I had shown you, that we use trend lines to connect the tops and the bottoms of the market, your higher highs and your higher lows in an uptrend, your lower highs and lower lows in a downtrend, your support and resistance in a consolidating market, right? So they also help us to clearly identify trends in the market and find entries usually, and also usually help us to minimize our risk and trades. So like I said, that we use trend lines to identify trends, because as you can read the word trend lines, lines of the trends, to identify trends. So one needs at least a minimum of 3 touches to clearly identify a trend and to use a trend line effectively to connect to those touches in that market structure. So you don't need a lot of touches when it comes to trend lines. So at least a minimum of 3 touches. And then what usually happens at the 4th touch is that if a 4th touch usually turns out to be the strongest one. So if you had 3 touches at the supporting trend line, if we're in an uptrend, then if the market fails to break below or to break the line on the 4th touch, just know that it's going to continue with the direction that it is headed to. So let's get into the chart so I can actually show you what I'm talking about. So just before we get into that, how to draw these things, right? So the best way to draw them is to first zoom out in your chart, like I usually do, or like I did in the previous video. And you must also draw the most clear and the obvious ones. Draw what you see, because whatever that you see in the market, whatever that you put in the market is something that you see. And I always say that whatever support or level or trend line that you put in the market, whatever technical element that you put in there, you must have an intention behind putting that technical tool, because you're not just putting them just for the sake of putting them. Because if you draw them correctly, they're going to work for you. If you do not draw them correctly, they're going to work against you. So it is important to know how to draw these technical tools. So it's best to draw them or look for them on a higher time frame, such as weekly, daily, and the 4 hours. At least a minimum of 3 touches when drawing a trend line, like I said, and also draw support and resistance on zones or levels which are strong and have multiple touches. So that is the way that you need to draw these technical tools. Zoom out, draw the most obvious, adjust your charts for most touches, draw and look them for on the higher time frames, at least a minimum of 3 touches, and draw support and resistance or levels that are clear, obvious, strong, and have multiple touches. So let's get into the charts now so I can actually show you that. So we are actually on the charts now, and I have found a pair that we can actually start on. So this is the euro versus the Swiss francs. So as you can literally see, we have zoomed out, right? So I am most interested on this part because it is the current market. It may help somebody else who's trading euro Swiss with entries and many more. But you can clearly see, for example, that we have touches there. So if we were to draw a trend line there, we would draw them like that. And they don't have to be perfect, guys, because we are not trading a perfect market. It's an imperfect market. Sometimes a trend line or touches are not going to be clear like in the past. But as you can see here, that was our first touch, second touch, and the third touch. First touch at support, second touch, third touch, and the fourth touch, until the market finally broke that particular level. It's the same thing if now we were focusing on this structure, because as you can see, we have these clear touches. These are the most obvious touches that one could have easily drawn into the charts. You see, for example, this resisting trend line now is not as accurate like the previous one, right? But it's enough for you to see like what's going on in there. Whereas the one in support is clear because the first touch, second touch, third touch, and then it was finally broken at the fourth touch. Right, so this is basically how you draw your trend lines. And sometimes the best way to draw these trend lines is switching from this candlestick chart to the line chart, which you can do that. Follow my cursor. So this is where you can do that. If the market is unclear to you in terms of touches, then you can switch to the line chart like this, and then this is how you're going to get now the accuracy. But sometimes, even though you can draw them on the line chart, but you find that when it comes to candlestick chart, they don't comply. So there's such things that you must look out for, right? So if you want to pin them, this is how you do that. And then because I'm using a candlestick chart and the line chart, so you just put in a star in there, then they're gonna be there without you having to go and look for them, right? So we're just gonna delete now this and actually go into the current price so that you can see exactly what I'm talking about, right? When you see the charts, that when there's no happiness or joy than that of finding a structure or a trend that is easily identified and it looks very beautiful. So look, for instance, I'm seeing a downtrending market here, and then the market has broken out of structure, which is it could be changing direction. Do you see that we're still on the daily time frame, but we are seeing this nice and beautiful trend with the market trending to the downside? So as you go lower into the 4-hour time frame, that is where now everything is going to be clear, right? So dropping it now to the 4-hour time frame, this is when you're dropping it now to a lower time frame, that is where now you have to fix the prices, right? Which is you have to adjust, like I said, adjust for touches so that everything makes sense and as to how you're going to use them and everything like that. So as you can see, this is me now fixing the prices, right? This is me now fixing the prices so that we can see which touches are relevant and stuff, right? So as you can clearly see, this is a trend that we had identified on the daily time frame, but it has become now more clear on the 4-hour time frame. So if you draw these trend lines correct or in the way that is going to best serve you, then the more it's going to be easy for you to find entries or make the most out of them, because you cannot get the most out of your trend lines if you do not do them correctly. It's like keeping someone that does not want to be with you anymore. How are you going to get the best out of someone that does not want to be part of your life, right? So if you look at this carefully now, if we were analyzing this, you would literally see that the market had a support level over here. And like I always say, that when the market is finally broken out of structure, look at the candles that are there, because if this was for me, I keep repeating this, if it was for me trading this market, it could have been enough for me to say I'm at support, the market is broken out of structure, I had a breakout and a retest and a bullish engulfing candle. So this is most likely what could possibly happen, considering the fact that the Euro Swiss has been selling for a very long time now. And then these could be our first turning points that we can use as take profit levels. Right, so that this is what we could have done if we were analyzing or breaking, or if I was doing a market breakdown, right? So this is how you draw your trend lines. This is simple, this is clear, this is nice, nothing complicated, just understanding how the market moves and connecting the touches or the dots as they become clear and clearer. So let's just break down gold quickly. If you look at gold, you would notice that gold is currently trending to the downside, right? I actually had analysis on gold, but we're just walking you through how to draw trend lines. If you look at gold, right, these are the touches that we had. Okay, so this is the touches that we had: first touch, second touch over there. They don't have to be perfect, guys, but as long as you understand the psychology behind using trend lines. Because if you look at this carefully now, we have our first touch, second touch at the top. We have our first touch, second and third touch at the top. So sometimes the market depends on the structure of the market or how that particular market moves. Because when it comes to other instruments, you find that it is best to draw them on the wicks, because that is where the accuracy is found or can be found. But with others, you can actually draw them on the actual high or the low of the candle, like this at the top. But if you look at support, gold is giving us that sort of, we need to draw these trend lines at the wicks, because there's no point in drawing it like this. But you can draw them like that if they work for you, or if you understand what is going on in there. But for me, I would prefer to rather have them like this. So we already see the structure, we already understand that we are trending now to the downside. So if we were to put anything, then we would just combine what we see on the trend lines with other technical tools. This is where now the thing of confluence comes in. Everything is clear now. We don't have to go into the 4-hour time frame and trying to dabble around and see what's going on, because we can clearly identify what's going on in here now. So we can just put in another low here, because we might be possibly headed to that point now. So dropping it now to the 4-hour time frame. Remember to zoom out so that you can fix the prices, because we don't need that trend line now to be at that, to be that long or anything like that. But at the bottom, we're still clear, right? So if we now drop it inside, now we want to understand what is going on in gold. You would most definitely see that we could draw another line there on the wicks of the candle, because gold is the type of instrument, in terms of how it's moving and the candlestick that it prints, it's best to draw them on the wicks than on the actual candles of the market, because the type of candle that gold prints are the one that have long wicks, because it's one of those volatile instruments that actually moves and pay. So if we were trading or analysts, we would also notice that we have a pattern here, a bearish continuation channel. So impulse move, then this was a correction, then we had a breakout and a retest. But this is some sort of now a level that we need to be cautious of, because the market can actually change direction when it reaches this support level, based off the fact that if this is an impulse move, then this would be some sort of a correction, so that the market can actually change direction when it gets to these areas, unless of course if it breaks below, and then we're gonna know that it's headed for this particular level, right? So this is just how you draw your trend lines, and nothing complicated. But let's go and try another pair that might give us something clear, something that can give us clear. Don't mind my pairs, guys. I know I'm looking at one of the most complicated ones, so I'm not gonna start this one over. But as you can clearly see, this is a beautiful structure, very beautiful, nothing complicated, nothing that is not clear. Because if you look at this structure, we have an uptrend in market, and then if you look at the top, even though we had wicks, but it would not make sense to draw this trend line there, because we only have two touches or at the wicks of the candles. But it only makes sense when we start putting in them here, because we can see this was the first touch, second touch, third touch, fourth, fifth, and the sixth one, if we are treating these as touches on the trend lines. Or we can drop it even more further, and then you see that is the most clear and obvious touches in the market. We don't have to draw anything else that is complicated. It's just something that we see with our naked eye, that those are the touches that we have currently on USD CAD at the dynamic support, dynamic resistance. And then if you look below, you'd also notice that we have support, which is the first touch, second touch, third, fourth, and the fifth one. So this is just everything that is clear, nothing complicated. We are drawing the most obvious ones. and not forcing anything. It's just trend lines and us understanding that we are just basically connecting the tops or the highs or the lows of the market, right? So let's look for another pair that have something clean and obvious. So yeah, like I analyzed on Euro USD, because as you can also see that we have a downtrending market, first touch, second touch, because we did not force the trend line now into starting it here, because yes, we could have it there, but it's just best to have it there so that we can actually see have a clear insight as to what is currently going on. Okay, so let's try something different now. We have on the chart now German 30, which is the other indices, right? So if you can look at the top, you can clearly see that we have 3 touches there that are clear and obvious. But at the top, we could have a trend line like this, right? It's fine, but at the same time, you also have an alternative to rather draw it somewhere around about here. Because like I said at the beginning of the video, that you do not have to force anything. You just put in here whatever that you see. So for me, drawing it like the first time that I just did, it would not make sense to me because I'm not going to use it anyway. But at least if I'm putting it down below here, it also makes sense, so I have a clear structure as to what could possibly happen next. Because if you put it somewhere around about here, it's still fine, but it's not reasonable for me, because how long the market is going to get there. You do not necessarily need this trend line. You would rather even have a support level like this instead of the trend line, because you're not going to use the supporting trend line. We would rather just have the one at the top only and the support level. That's done. So now let's get into how trend lines can work for you if you draw them correctly. Because now like I said, when you're doing confluence, you combine these tools with other technical analysis tools, right? So because if you would notice here, we had a strong support level, okay, and then we also have a minor one over here. So having trend lines working for you, I'm talking about things like this, or even that one at the top there. Because what's going on here now, you literally see that the market was consolidating here. So it was not yet a clear trend line at this point, or at the very first point. So we can just ignore that, but we could have done or understood what the market was doing there without this trend line. But going forward now, as you can see, the market starting forming lower lows, lower high, lower low, lower high, lower low, and then lower high, right? So if we were looking for entries, we would know that up below this resistance level, which the support level, which was now turned into support, we start looking for selling opportunities, because every time when the market reaches that level, it rejects, right? So it rejected for the first time, printed a bearish engulfing candle. No, it's not a bearish engulfing candle, it's a bearish candle only. And if you look clearly what's going on in there, we started having rejection candles. So this is where I'm at. We started having rejection candles. So as you can see that we had a pin bar, an inverse pin bar, and a bearish engulfing candle. So we would enter this market based off the fact that we are on a trend line. We have a second touch off in the trend line. We have a strong resistance level. It was support and then it was turned into resistance now, but we just understand that it was a strong level. So in terms of candlesticks, you can literally see that we have those 3 candlesticks, the green one, the inverse pin bar, and the bearish engulfing candle. So if we were trading DXY, or it was somewhere around about here, that could have been enough for us to put in a sell there and hope that the market is gonna get to this level, because we already had this level based off this touch. So this is just a combination, or how you can combine these technical tools in order for them to help you find entries. So it does not end there. Let's just say we still had the positions running from that point, but do you see that this is also another opportunity here? Because we're at a resistance, we have a third touch of the trend line, and then we have a bearish engulfing candle. So this simply means that we would again have entered another sell, and because we have this other technical tool which is now acting as a resistance, it also helps us with our stops or putting in stop loss. Do you realize that this is at least a reduced risk, but the reward is much more bigger than the loss? Because we have at least 3 confirmations that the market was going to go to the downside. So this is how you draw trend lines. This is how you can use them to your advantage when drawn correctly. Because if you do not draw them correctly, they're going to work against you. But we would rather focus on how you can use them working for you than them not working for you. So these are the type of things that trend lines, combining them with other technical tools, can help you have an edge or an advantage in the markets. Because this is, for example, me. This is me. If I had seen these candles or was paying a lot of attention to German 30 and having the market printing such candles, then it was going to be enough for me to have positions running on German 30. And it's still the same because I realized that we're in a daily time frame. So if I can erase this, let's quickly go back there. So another thing that we could have done here, the trend line is still the same, the resistance is still the same. But if we were to drop it now to the 4-hour time frame, the entry could have been different. And then we could have added yet another reason why the market was going to sell. Because look at the market, how is it approaching that level correctively, like I always say. And we also have a trend or a pattern inside a pattern here that was serving as a confirmation that we would start selling the market to the downside. Do you notice that I didn't force any trends here or any trend line here in this pattern? Because this is a clear touch, second one, third, and then we didn't have the fourth one because the market broke it. So we would have rather maybe entered the market somewhere around about there at that resistance, or we would have entered on the breakout of this trend line. So you can use these things in your advantage like this, because if it's the market is being respected, right, or when the trend line has been broken. So it's things like that. It's obvious stuff. I'm seeing another one here. You see, I'm not forcing anything. This is just me following the market, seeing that the market is giving me clear structures, clear patterns. So one job that I have is to connect the dots. Or even here, this is a selling opportunity. This is a selling opportunity at the current market price, because you see the market is forming lower lows, lower high, lower low, lower high, lower low, lower high, and we even have a minor resistance level over here and some sort of a bearish engulfing candle. So we're just going to wait for the close of that candle. But this is an opportunity for someone to add a selling opportunity, and hopefully that the market is going to come back to the support level. And should it come here correctively like this, and then give us maybe an inverse head and shoulder double bottom, then we're going to start looking for buying opportunities to the upside. So this is how you can use trend lines. So I'm just going to end it here for today. So I hope you enjoyed and liked this video. So please do me a favor, like I said guys, abuse that subscription button. Otherwise, thank you for the support. I will most definitely see you on the next video.